everybody has been talking about what happened at the debate and what's going to mean for elections and who's even going to run. And of course, that is indecision, and that is certainly causing people a lot of stress, if you will. And so, we look at the economic numbers, and we're going to try to make sense of this also. Let's really go from politics and policy for a minute and talk about what's right in front of us. On Friday morning, we got a jobs report. And again, Brian, jobs are in focus.
Yes, the jobs report number, the headline was better than expected. Payrolls increased more than 200,000, and so that beat the expectation. But when you dig into the details, you notice a few, I think, somewhat maybe unsettling trends in the number. The unemployment rate did tick up, so now it is above 4%. It went up to 4.1%, which, don't get me wrong, that is still very low, but that is higher than the 3.4% that we had last year.
So let's talk about that, Brian. There's a couple of things that go into that. Number one, why is the unemployment rate going up with the numbers that we're seeing? I think people have to understand the numerator and the denominator, and I don't want to get too deep in the weeds, but I think it matters.
Yeah, this is where having like a chalkboard or a whiteboard would be really helpful, as far as the numerator and the denominator, but it is based on the math. If you have in the numerator, so at the top, you have the number of people unemployed, and then on the bottom is divided by the number of people who are in the labor force. And so
quotes, right?
That's right. Yeah, that's
people
true.
That are in the labor force. Right?
Because they do have to make some arbitrary decisions about, are you in the labor force or not? They don't include people who gave up on looking for a job. So so
the people that are on our payroll that are just showing up, but we're paying them, are they in or are they out? I'm just joking.
That's right. Yeah. Well, it's about, are they counted as labor, but are they actually doing laboring? I don't know. Yeah. And so you can have the unemployment rate go up for a good reason, which is the labor force is expanding, or it can be for a bad reason, which is basically you have more people who are becoming unemployed. And in this particular setup for this past month, it's because the labor force actually did improve. It increased a little bit. But one of the big drivers of the divergence that we have seen between the payrolls number, that comes from surveying a bunch of employers, asking them how many people are in your payrolls.
That's the ADP report.
Yep. And then you have the number of, they survey a bunch of households and ask, are you working or not? And that's where you get the unemployment rate. And there's been a divide between those two reports for quite a while.
And that's where the spinmeisters get in, right? And that's where it depends on which side of the political aisle you are on. You're going to say this was a good report, it was a bad report, we're doing good, we're not doing so good, because of the way it's calculated.
Absolutely. And you can cherry pick whichever one you want to look at or emphasize. And that's oftentimes what it is. And that's why, we think we have to look at the totality of the evidence. What is it really telling us? And from that perspective, it does look like growth is slowing. The labor market is still doing all right, but let's consider the unemployment rate has gone up. You've seen the number of people who are working part-time because that's all they can find. They might want to work full-time instead. That group has grown by 18% over the last year. So that's a rather large increase in the number of people. They count as being a payroll, right? It doesn't matter if you're working 1 hour or if you're working 100 hours. And so we've seen that number increase. And also the average weekly earnings has been kind of flatlining. So even though wages have been going up, hours worked have sometimes been declining. And so maybe this is one of the reasons why a lot of people aren't feeling like the labor market or their personal economy is doing as well as some of these macroeconomic reports suggest.
Let's talk about that, Brian. So there's a number of things that are happening. Number one, we're seeing jobs that are coming into the market, but people aren't feeling as good about the economy. And that's, again, back to the partisan political argument, because of the fact that inflation was outpacing people's wages.
Yes.
And by the way, we spent a lot of time on this, but it's a very important point. When inflation slows down, that doesn't mean that prices are going to go down. And so you still go to the grocery store, you still go fill up your tank or whatever it is. Prices aren't coming down. They're just not growing as fast. And that was one of the big reasons why the economy is front and center, and the number one reason why people are coming out to vote. When they are polled, they're saying the economy is number one. So all of this argument leads into, for example, what the Federal Reserve is going to do. And why that isn't so important is because they determine interest rates. And we can spend a whole lot of time talking about quantitative easing and what the Federal Reserve did and was it good or bad. But this is all going to come together in the conversation. And that is the reason why, Brian, you've got to go through and see what is in your portfolio, because some investments will do better in this type of environment. And if the economy begins to slow down, do you shift your thesis, your investment thesis?
Yeah, and we believe that we want to invest for the long term. Where are those long-term investment opportunities? And you really do have to be in it to win it, as far as to get that financial success over the long term. You do need to stay in the markets because that's where the growth comes from, especially with equities over the long haul. And when we're talking about the long haul, that's taking that horizon of 10 years, maybe 30 years, kind of depends upon where you are in your own personal life cycle about investing through that. But there are some changes that you can make on the margin as far as with positioning. And when we look at, for example, S&P 500, the biggest companies that are out there, they don't necessarily have a lot of debt. So they're not necessarily feeling the full weight of the Fed's rate hikes. Compare that to small cap companies, which on average, they have about 4 times the amount of debt as those bigger companies do. And so it's those smaller companies that they have been really struggling a little bit more financially and also from a market performance perspective. But if the Fed, if they look at this data, they take notice that the economy is slowing, inflation is beginning to slow as well, they could really release that pressure valve that has been really burdening a lot of these smaller businesses as far as with their cost of financing. And so that's the type of environment where if you've been sticking with small caps, it hasn't been the best ride so far, but it might be a little too late to give up on them, because if the Fed comes out and signals that they're going to start cutting rates this year, then the market is going to look ahead and say, oh, now the burden is really coming off of those companies.